Hi guys, Andy here. Let's have a look at the S&P 500 futures for Monday, December 11. For the record, today is Saturday, December 9. Time is around 2:30 p.m. GMT. So we took out the high right here, depending on which data source you take. We took out the high right here on the Wanda platform. It's not the case, but other data sources indicate that we took out the high right here. So let's have a look at the higher time frame, or let's start in the higher time frame. So my take on the S&P 500 is that we made a wave one here in the higher degree after 5 waves. Then we came down as a wave two, fulfilled the minimum requirement, touched the zero point 0.5 FIB retracement level, and from here, I believe we started a new upward cycle, or that's my assumption for now. And so, then it could actually be that we are working here on this wave three, this higher degree wave three. So if we take the length here of the wave one, the wave two, then this becomes our target area, the area between the 1 and the 1.618 FIB extension. So, of course, we do not go there in a straight line. We should go there as 5 waves. And so now I believe we are working here on this wave one up. So I had some questions in the comments section, questions about alternative counts. Like somebody asked if it would not be possible, like that this here, so that this here, the wave three was situated right here, that this is the four, and that we are now finishing as a wave five with an ending diagonal. If that would be possible, yeah, I think if you look at the waves, this could be possible, because the main motivation for this reasoning was that it was hard to see the subwaves into this structure. Okay, could be, but yeah, I prefer to see this as a cycle that is finished. Simply, if I look at other indices, it is more clear in the other indices that some kind of cycle was finished right here. So therefore, I prefer to call this a wave one, and this a wave two down, and so that we are now starting a new upward cycle. And of course, if it turns out that this is a fifth wave, I mean, yeah, time will tell. For me, this is at this moment not so relevant. Um, Afterwards, it's always way easier, I would say. But for now, I prefer to stick with discount, a cycle that is finished right here. This being another cycle, and so from here, a new cycle up in the higher time frame. That would be my preferred count if I look globally at the market, also other indices. And then also somebody else was saying, could it not be possible that this was a wave one down, this a wave two up, and then we go, or then we should go down as a three and a four and a five? Of course, this is possible, but I mean, for the moment, I have no reason to consider this scenario, because if we look at S&P 500, the S&P 500 is bullish. We are making higher highs, higher lows. So why would I try to predict or assume that this is a top, this wave one down, two, and that we then will drop like a stone? I'm not saying that it is impossible, but I have to assume the most likely scenario for my trading decisions, and then I just prefer to go with the trend. If we are making higher highs, higher lows, then for me it's more obvious to assume a bullish scenario than a bearish scenario, and so that's the reasoning for the choices I make, to assume something bullish and not something bearish. But that does not mean that something bearish cannot play out. But for the moment, for my trading, I really do not need to consider taking out the low right here if the current price action is right here. It is better just to focus on this structure and make this structure fit in a bigger picture. And I think for now, with the data we have now, this is the best way to do it. So I hope this answers your questions. If you have any other questions, please just comment. I will be happy to deal with them in a next video. So okay, weekly chart. Let's go to the daily. So what we see here now is, so assuming that we took the high out right here. It was not the case on the Wanda platform, but other sources are showing that we took it out. Then of course, the scenario in red here is no longer possible, or in the sense that I always like assumed this to be a zigzag structure, and it is not possible to have an overshooting wave B. And in a zigzag, we have to stay below the wave one high. So um, if this would take place, this move, this wave A has to be a three waves as an expanded flat. So then it would be like 1, 2, 3, overshooting wave B, and then a wave C down here to finish a wave 2. I will keep this scenario on my chart, but I have to say it is it's less likely that this will play out, in my opinion, simply because it starts to look that S&P 500 is following the Nasdaq. I would prefer the Nasdaq count on the S&P 500, which is wave 1, wave 2, 3, 4, and now the fifth wave. This starts really to look like 5 waves, and so if it is 5 waves, it is hard to classify it as a wave B, because a wave B is corrective and should be 3 waves. However, I will keep the scenario on my chart, but for now I prefer the scenario here in green, saying wave 1, 2, 3, 4, and now we are working on a fifth wave, which should then be the end of our wave 1 right here. The only difficulty here with this fifth wave is, like I explained in my Nasdaq analysis, like the fifth wave can be finished right here, as we took out the wave 3, so the minimum requirement is fulfilled. However, something like this could further take place, where this is just a wave 1, then 2, 3, 4, 5, some kind of ending diagonal that we then have here as a fifth wave. That's also a possibility. This we cannot know up front. So let's have a closer look now at the structure right here. So if we look at the 4 hour, like I said, for a moment, or there was a moment that I was tracking this structure and that I still saw 3 waves in this structure, but that moment has passed. Like if I would have to label it as 3 waves, I would call the end of 3 waves right here. But as you can see, we are further extending, going up, and this for me now really looks like 5 waves. So the count in green and not the count in red. So I will take off the count in red right here in 3 ways, 1, 2, 3. It really becomes 5 waves now, I would say. And so the wave B is still possible. Like we could do something like this. This is wave A, B down, and then C up. Then we also have 3 waves as wave B, and this 5 waves is just the wave A. So therefore, I keep the scenario on my chart. However, it becomes less likely to play out, like I said earlier. And then if this is an overshooting wave B, this can of course not be 5 waves. So we have to foresee another count. And then I would say, let's label it as a wave A, B, and then the C right here. Let me put it in the right color. So then I would do wave A, wave B, and then from here 5 waves down as a wave C. 1, 2, 3, 4, 5. It's not my favorite count, but I would like to keep it on the chart just to to be prepared if something is playing out not really in line with the count in green, my primary scenario. And so here, what we are seeing is that this structure is ending, in my opinion. We are seeing divergence here in the 4 hour. Let me check in the daily. We also have some divergence. So the interpretation, or my best interpretation, would be that this structure is ending, but that does not mean that it has to be the end of the wave 5. It can be the end of the wave 5, but remember, we can also do something like 1, 2, 3, 4, 5, and that wave 5 is in right here. That would also be a possibility. So 5 waves up, divergence, looks like an ending structure for now. And then, yeah, on the lower time frame, like I already discussed, this week, it is hard to come up with a good interpretation of this structure here for the US indices. We have some important economic events the upcoming week, so it looks like we are waiting a bit. It looks corrective. So it could be corrective, but here in case of the S&P 500, it could actually also be an ending diagonal here from the wave 4 low as like a 1, a 2, then 3, 4, 5. That could be a possibility, but yeah, like I said, interpretation is hard for these kind of structures. I think we just need some kind of trigger next week that can bring us more clarity on the lower and higher time frame. But for now, I would say here in the 4 hour, this looks like an ending structure, and then on the higher time frame, for now, again, this also fits into an ending structure. So this would be the 1, the 2, the 3, the 4, and the fifth wave here is also ending with divergence in the weekly and in the daily. However, that does not mean that this has to be the end of the fifth wave. I really have to stress this. There could also be something playing out like this: 1, 2, 3, 4, 5. Okay, that's my analysis. If you enjoyed it, please like, subscribe, comment to support my work, and I see you one of the next days for another update on the S&P 500. Have a nice day. Bye bye.